At some point during the shopping process, you need a little inspiration and a little motivation as to what the benefits are going to be, aside from the obvious, when you buy a home. So, I want to talk to you today a little bit about the income tax savings that is actually amazing now in 2025 and 2026. For the next, for sure, the next 4 years, we have a new tax law, and it says that you can write off up to $40,000 against your ordinary income to help you with your income taxes. So that means if you make $100,000 a year and you're buying a house and you have interest and property taxes and maybe a few other write offs, you can write off up to $40,000 against your ordinary income. You have to file a long form, and I highly recommend that you talk to a CPA. I have a really cool calculator on my website at amydebuskhomeloans.com. If you're getting this video through email, it's in your email. There's a link to it. And if you're on my YouTube channel, it's in the comment section. There's a link to it. So go on to my website, amydebuskhomeloans.com, and play around with it. You can plug in what your income is. It tells you what your tax bracket is compared, based on whatever your income is, and it'll show you how much you're saving now by not having a house, like how much you're paying in taxes now versus how much you are going to be saving. I was playing around with it the other day and I was using the example of 22% tax bracket, somebody that made about $150,000 a year. And I was saying that they were going to buy a $550,000 house. They were gonna be saving $600 a month. So that is a really good piece of information when you're thinking about calculating how much you're gonna have to save or how much you're gonna have to spend for the housing expense versus how much you're paying now. Maybe if you're renting now, there is a big spread between the rents and the mortgage payment. Well, that is gonna be part of the piece of the puzzle that's going to bridge the gap between rent and mortgage, or vice versa. If you're a move up buyer and you're coming from a smaller house, lower mortgage payment, um, even a lower interest rate, and you're going into a bigger loan, higher interest rate, you're going to have a better tax write off because the things that are write off on a mortgage is the property taxes, the interest that you pay, and the private mortgage insurance. So if you're having to pay private mortgage insurance, that's tax write off too. If you have any questions about that, I can be reached at 916-705-2557. And then just a disclaimer, I am not a CPA, and I highly recommend that you consult with a tax preparer or a CPA. And if you'd like a referral, I would love to refer you. We have a lot of good CPAs that can talk to you and run numbers for you as well.